the first one is called the SEBI Issue of Capital and Disclosure Requirements 2018. So today we are going to understand these regulations in detail. Okay, fine. So these are called, now Samya, can you read this?
Yes, sir. Types of issues, IPO and FPO.
So, that first, I'm just giving some, main summary, of what all these regulations contain. So there are two kinds of issues mainly, the IPO or an FPO. Whenever a company wants to raise money for the first time to the public and it get listed in the process, so the shares are traded on the stock exchange subsequently, it's called an IPO. The second time or subsequent time, anytime in the life, company can raise money through public, and it's called further public offering. Okay, so these regulations have made laws regarding these regulations. Third one.
Eligibility requirements, IPO. Eligibility requirements, FPO.
So, then, this regulation contains the requirements with regard to, IPO and with regard to NFPO. Okay, they are almost like identical with some differences, because the first time when a company raises the money, it's called an IPO. So the laws and regulations are much strict. Okay, and subsequently when a company wants to raise money because it's already listed, so the regulations would be almost same, but little bit lesser, rigorous. Okay, then.
Additional requirements for offer for sale, issue of warrants, filing of offer document.
So, then there are some additional requirements for offer for sale. Now, I told you what is offer for sale. I'm just, again repeating. So I ask some of you to tell what is offer for sale. Offer for sale means that if you are already a shareholder of a company, the company is not listed, for example, okay, or company may be even listed. So the existing shareholders who are big shareholders, they can be, part of the promoters, or they can be strategic investors, and they would like to offload their shares to the public. Like recently, LG Electronics have come up with an IPO where, I think mostly it is offer for sale. So the Korean company promoters, they have been offloading their shares through the process, so that now the shares can be held by the public in India. So offer for sale would normally mean offering your own shares if you're holding, okay, either as a promoter or as a big investors, or you can be a venture capitalist, or any form you hold shares and you want to exit the company, okay, because either you are completely exiting, or you're exiting some major part of your holding or some minor part of your holding. You can do so through offer for sale. So at the time when a company raises money through an IPO or an FPO, so it gives an opportunity for the existing shareholders to offload their share. Okay, so what is offer for sale? Anyone? Mananya? Ad- who are there? कौन है मीटिंग में?
Uh,
Yeah.
Sir, it's basically it allows existing
What's your name? I
shareholders.
can't, because I'm not able to see the screen. What's your name?
Sir Shivam.
Huh?
Sir Shivam.
Shivam, yeah, Shivam. Shivam,
Sir, it allows the existing shareholders to dilute their stake, whether it's a listed company or even if it's not a listed company, by offering their shares to the public. I mean, in a more transparent manner.
yeah. Like, recently LG Electronics, and earlier many companies like Zomato, and, companies like LIC, when the government was offering the sale of its shares. So government has offloaded its shares. So it is a process of, public disinvestment. So they were issuing their shares like IRCTC. It was like 100% offer for sale, where, the shares were held by the government. So now they were, reducing their shareholding. They were collecting the money from the public. So it's called offer. Then we have issue of warrants. Okay, so issue of warrants is basically, it gives rights. Whosoever gets warrants, it is at the time of IPO or an FPO, company can issue warrants. Okay, now the warrants give rights to the whosoever hold warrants. He can he can convert these warrant into equity shares on a in a certain span of time. Okay, and the price is already determined. So we'll talk about what are warrants in detail, okay, later on. Then we come to filing of offer document. So this is the first process. Whenever the company wants to raise money, either through IPO, FPO, or rights issue, whatever, so company has to make an offer document, which is later on called the prospectus, and and also called the red herring prospectus. So before it is called, either red herring prospectus or it is called the prospectus, the general term is called offer document. So a company has to prepare an offer document with the help of merchant bankers, okay, and issue to the public so that they can go through the offer document. So they need to file this offer document to SEBI for getting their approval before they can, launch an IPO or an FPO. So we'll talk about more about this offer document. So what is an offer document called? Other names of offer document which I mentioned. Can you just repeat them? Anyone? So it's called what?
Red herring prospectus.
Red herring prospectus, or it is called prospectus, the final prospectus. Okay, fine. So a draft of a document to public. So once the company has issued filed the draft of a document to SEBI for the approval, at the same time they have to, open the document to the public for their comments. So the offer document has to be published on the website of the company so that public, before they participate and invest in the company, so they can just go through the offer document. For at this time they are only, giving comments. They are seeking some clarification on the company. Okay, so it is mandatory for all the companies who are raising capital, either through IPO or an FPO or any other mechanism. So they have to, share that offer document to the public, as well as they have to file a draft offer to SEBI for seeking their approval. Now, these are the various terms, which we are learning. We are not still, going in detail. So there's something called ASBA, application supported by block amount. Now, whenever the company issues shares to the public, earlier, the money used to go directly into the company's account. But then, sometimes the company gets, many times more money than what it has asked for. So, like, the offer may be oversubscribed, say 10 times, 15 times, 20 times, 30 times. So, company has to refund most of its money which they have received by way of checks. So, that was an earlier process. But now, with the introduction of UPI as well as ASBA, and you'll soon understand the UPI has been also introduced. So, before the UPI came, it was ASBA, where the person would be giving a mandate that to his banker, that if the shares are allotted to him, then the money can be passed on to the issuer. That means the company which is raising money through an IPO, then the money can be go to their account. Okay, if the shares are not allocated, then the block will be removed and money will be free with the person who has applied for the shares. So now he can use the money. So till the time the money will remain blocked in his account till the IPO allotment process is over. So whenever the company raises money, so a lot of people apply for for seeking shares. All of them may not get. So the company, so they may apply through the route of ASPA, application supported by block amount. So they will make an application and they will tell the banker to block a certain amount which is equivalent of the application money, which will remain in the investor's bank account. It will not move out, but he cannot withdraw this amount till the process of IPO or FPO is over. So once the IPO FPO process is over, the shares allotment process has been announced, and if the applicant gets shares, then the amount will move from his account to the company's account. Otherwise, the only the block amount will be removed, so that he can now, because since he is not getting any shares, so it will remain in an account. Okay, so now of course we have a UPI also. We'll talk about that. Okay, so do you understand what is ASBA? Anyone? Samya? Ananya? So what is ASBA? How it is different than the other earlier system? Have you all, anybody applied for an IPO recently?
Uh, no, sir, but I know what ASBA is. So,
Okay, so what is ASBA?
said basically, so when you apply for the shares, so it just blocks your money for the IPO. So in case you are allotted, so they'll just transfer that amount, and in case it's not, it will get refunded to your account.
Okay, fine, good. So that is Shivam.
Yes.
Okay, शिवम के अलावा कौन है? I mean, I'm just going to check. So I'll expect answers from them also. So we have, Harshita. Harshita, be attentive.